Welcome back to the Goofy Investing channel, where we talk about investing in the stock market. This video is going to be about Navitas and some updates. So let's get right into it. All right. So year to date, this stock is down 68.03%. Shareholders, to say the least, are probably not happy. This is a stock that I've been buying and heavily getting into, and I think that for several factors of reasons, these guys are going to be the winners due to some upcoming patents, great management, and we'll talk a little bit about some management too in the video and some price action going forward. On the 6 month, we saw a 43% decline. I have been buying this. I actually started buying this a year out. All right. More so like in the threes or high threes and fours, and didn't really buy too much. I started off with a light position to start off. But I have been having my eyes on this company for quite some time. Investors that see the smart money, the super smart money, got in this thing too early. Okay. And then there is a saying, the super smart money will get into a position first, but timing and valuation matters. Okay. Tactically, as an investor, I think that patience is a virtue, and being able to, you're not going to time the bottom of things, but you got to understand, the interest rates, the macro, the business model, and how everything works. Last week, I put out a video on Navitas talking more about business model. I'll discuss a little bit about it here in this video, but go to my channel and backtrace to that other video that I posted last week or so. Okay. All right. So, or I'm sorry, the week before. Okay. My last Navitas video. All right. So some changes that have been announced that has happened. CFO. All right. CFO is resigning. Janet Chow. This is a CFO that came in January, right when I was building the position. I wasn't really too enthusiastic back in January to see a CFO change, because that affects some of the fundamental analysis going into the position. But very irrelevant, because the company is at early stages in my investment horizon. So let's look at the filing paperwork. Okay, so this is the Form 8K. These forms are posted to the SEC for updates on changes that the company makes. And as you can see here, let me see here. The company is appointing Todd Glickman, which is currently the Senior Vice President of Finance, as the Interim Chief Finance Officer and Treasurer, effective for October. All right. That's pretty much next Friday. And he'll start taking over. So not effective yet, but it's the announcement thereof moving forward in the future. Mr. Glickman, 40 years old, joined Navitas in 2015 and has progressed through a series of financial leadership roles, including corporate controller from 2015 to 18 and interim CFO from October 21 to May 22. Mr. Glickman has more than 18 years of experience in finance, accounting, and corporate development. He holds a bachelor's in finance, investment in banking from the University of Wisconsin and Madison, and an MBA from the University of Southern California. Mr. Glickman will succeed Janet Cho, who announced her intention to resign as CFO and treasurer of the company effective for October 2024, Miss Cho is leaving, here are keywords, leaving for personal reasons, and her resignation is not the result of any matters related to Navitas financial statements, disclosures, and accounting principles and practices. Okay, so I am tracking Navitas had a late filing report on their last quarterly statement. There could be some speculation that her resignation could be due to, maybe the management telling her you need to resign. But the way that the company is pointing this out, it's for personal reasons. So personal reasons can be a lot of things. Sometimes, people will resign due to medical reasons and they'll announce it as medical reasons. And other times they'll resign for medical reasons, but they'll identify it as personal reasons. Okay. So she seems pretty young. So this her personal reasons can be a number of things. It can mean that she thinks she found a better opportunity, personality conflict, or maybe she's trying to move somewhere that does the position doesn't really facilitate that area geographic for her to do her work. It can mean a number of reasons. Either way, what's said and done is what's said and done. This company is so young in its growth and its phase of growth that there might be some volatility with some leadership changes and therefore as they're building up the foundation of management. All right. So let's look more into Todd Glickman. All right. So he was a venture capitalist at Malibu IQ. All right. And he evaluated early stage technology investments. He worked for Activision Blizzard. All right. And Vance Street Capital and private equity and Lehman Brothers and investment banking. All right. So what this tells me is he understands value creation through stock equities. All right. He's in the investment banking sector. He's got the credentials and the pedigree for it. Um, and so Activision Blizzard, that was a gaming company that got bought out by Microsoft. I'll admit I was an Activision Blizzard shareholder and I got bought out by Microsoft through that acquisition. So Microsoft bought me out my Blizzard shares, if you will. I did okay on the stock. I probably would have preferred that I held the shares and they did not get acquired, but whatever. Sometimes you just get bought out as a shareholder. All right. But anyway, interim. Let's talk about the word interim and what that means. Okay. That means temporary. He's going to be the temporary CFO. And he's done this before, just a couple of years ago. All right. From October 21 to May 2022. And pretty much what this means is they're either going to find another CFO. I've seen sometimes where interim CFOs actually just get promoted in as interim to permanent CFO, depending on how things work out. I mean, if he's been with the company for almost 10 years, maybe they promote him to CFO if they think he's doing a good job and everything runs well with personality, performance, and on that page of music and so forth. So we'll see how he does. He definitely does have the background and knowledge to know that he knows what he's doing when it comes to wealth creation. All right. So let's take a look at some price action type stuff with Navitas, and I'll talk about upcoming earnings and stuff that I'm probably anticipating with the actual equity and how I see things from these different angles. All right. So we're looking at this 1 month. We're seeing a little uptick right here and some strength. That doesn't mean too much. This thing is going down. It's been going down for the past 6 months. So this can be just another uptrend before another step down. All right. They got earnings coming up November 5th of 2024 post market. That is going to land on a Tuesday, all right, after market. And I'm hoping, I'm sure, and hope is not a strong word. I'm hoping that they do not delay earnings, they report accurately and on time. All right. When a company at this magnitude, as far as like a lower market cap, files late, all right, that's an opening for the bears and shorts to come in and to see more volatility and lack of confidence in their accounting standards and competence, if you will, as a management team. All right. So let's I don't foresee it. It could happen because of the changeover with the current CFO to the interim CFO. There could be some turbulence there when doing the numbers or so forth. So I'm not saying that I anticipate that, but I am saying that it could be a possibility. All right. If that happens, this equity will go down, I project. We'll look at let's do an update on short float. Seeking Alpha's got this thing shorted at 15.21%. That is not accurate. All right. Shorts have increased, and as of the 13th of September, they've increased short float by 3.65%, and the percentage is 25.55% on the short. All right. So this company is being highly shorted. The bears are in control. And typically, when I'm building out my positions, the bears are in control. All right. And, that to me, that's kind of what they're good for. They push the equity down so I can start getting into my ranges and building out my position. All right. Let's take a look at that position. All right. And talk a little bit more about earnings and some more macro fundamental type stuff. All right. So currently, if you looked at my last video, I had about $5,000 invested in Navitas. I've upped my position. I've upped my position. So now I got over $7,000 invested in Navitas. Cost basis into the twos, $2.98 a share. I do plan on getting this actual position up to 10,000 invested capital at a minimum, and to cap off at the nearest 100th quantity in the actual share count. All right. Just because I get up to 10,000 in invested capital and that actual share count goal, that doesn't necessarily mean that I'm done buying. What I do is, once I get to that threshold to where I have that set, I reassess the company and I see what valuation they're trading at and so forth. And then I decide, okay, do I want more shares? Do I need to double down? Maybe I need to get the cost basis to 15,000 invested capital, or maybe another share target count. All right. If you follow along with my channel, be sure to subscribe and thumbs up, and hit that bell notification to keep up with that actual stuff, because I will be covering this stock more extensively, all right, in the future. So I plan on having this position initially built out by November. I'll have 9G's invested capital before they report. And let's talk about that earnings report, okay? With the actual interest rates now at peak. Last quarter, the actual management, they guided that they're slashing their revenue growth rates by the end of the year. And analysts now have a target of 12.91% growth. All right. If you're investing in this company, a lot of growth investors are. All right. And they were investing when these projections were 50, 40 to 60%. Okay. When the actual company slashes their growth metrics for end of year guidance and the analysts reciprocate, stock's going down. All right. Because the actual future projections of revenue growth are actually embedded in the perceptive stock price valuation. All right. And then Wall Street plays this short game to where they're more about shorter profits, analysis, and a lot more trading, if you will. So to slash end of year growth guidance, that this equity will be depressed for a while which, if you haven't noticed, on the 1 month even is down 16%. If you're getting into these positions as a growth investor, yeah, it's like buying a falling knife, and the position is down. And I think at times this thing was down maybe 25%. When I'm building a position, I do not focus on the actual current value or the total gain. I'm focused. I tried for mental psychology notes and exercising of building a position. I focus on cost basis and I focus on quantity, because in the end, those are more the fixed numbers. Cost base more so quantity is more fixed than cost basis, because you can always do other methods to lower your cost basis without touching your position. And you can subscribe to my Patreon. I'll put other videos out on that on YouTube as well to go further in depth on what I mean. All right. So let's talk about this earnings coming up in November 5th. Once again, there is a chance that the Fed lags for these high interest rates are going to impact more, to where Navitas management will have to slash again. All right. I'm hoping not, but it is a possibility. It's going to depend on the actual initial projections of their end of year guidance that they put out for updating their end of year guidance to slashing that revenue growth. I'm hoping they were conservative and they're on target, or even lowballing. All right. We're going to find out how accurate they are. Because remember, when they reported their Q2, the last quarter, if you will, they did the actual projections, and depending on that accuracy, we're going to find out. They were in the next quarter that they're going to report in November. All right. So that's how that works. So they see a little bit more, all right, on what's happening. All right. In the event that this thing gets slashed, all right, in the event that they slash their revenue guidance again, we can see stock price contractions probably going into the ones. And here's another thing that I want to mention. It can get bad to the point to where if this equity trades under $1, the NASDAQ indice, and they're currently traded on the NASDAQ. If this thing goes under $1 for a certain period of time, the NASDAQ indice can kick the actual company off the NASDAQ indice. All right. What are some ways that management may combat this? Well, they might institute a reverse split, which I'm not really a fan of. And pretty much, if you think about a split, they do 3-to-1. It pretty much splits the price up 3-to-1. And your position will change at an administrative, not a fundamental rate. Your gains will still be your gains, but you'll hold 3 times more shares. If they do a reverse split, okay, it's just that. It's a reverse split. So if they do a 3-to-1 split, the share current price will go up 3 times, and your share count will reduce by 3 times and be more compact. Okay. So I do not like reverse splits because they're indicators of weak financial fundamentals and stock price action momentum. But that's just me, right? This video ran a little bit long. I do remain bullish on Navitas. I do hold a position, and I plan on increasing my position. I believe that some of their patents will start coming through in the second half of this year. And these patents will start kicking in Q1, Q2 of next year. And with the reaccelerating of revenue growth of next year, all right, which we see here, going above 30%, I'm hoping with these Fed cuts on interest rates, they impact the different sectors of Navitas's business model, and we'll see actual increases also in their margins, all right? If you're getting value out of these videos, subscribe once again. Check out my Patreon, $5 a month. You get more exclusive access to me, exclusive content, and instructionals and different spreadsheet tools where I actually demonstrate and show you how to do them. and then be with a like-minded community of investors. All right, thank you all for your time. I'll be putting out more videos soon. Have a good day.